Good morning, this is the latest market news. I'm Uliana. Asia extended a sell-off in global equities on Thursday as heightened concerns about world economic growth sent Japanese stocks tumbling and US Treasury yields down. MSCI's broadest index of Asia-Pacific shares outside Japan extended early losses and was down 0.6%, while Japan's Nikkei stock average tumbled 2.2% and touched a 4.5-month low. But S&P 500 E-mini futures edged up 0.2%, which might portend a more stable day ahead on Wall Street as investors await more US data. The S&P 500 briefly turned negative for the year on Wednesday, while European equities shed 3.2% to mark their biggest one-day slide in almost 4 years. The dollar's index against a basket of 6 major currencies stood at 84,850, down about 0.4% on the day and valuing at levels last plumbed in September. Speculation of higher US interest rates had pushed the index to a 4-year high of 86,746 earlier this month. Against the yen, the dollar stayed at 106.04 yen after dropping to a more than 1-month low around 105.20 on Wednesday, while the euro was slightly down on the day at 1.2830, after rising as high as 1.2845, its highest level since September 24. Spot gold added 0.2% to $1,243 an ounce, after marking a 1-month high of $1,249.30 on Wednesday. Economic reports are taking on increasing import as Europe's economic trend weakness and the crowd becomes fearful that the US may be susceptible to the deceleration that's swirling about the globe. In the search for fresh numbers to evaluate the risk, today's revised data on Eurozone inflation will be a key event. EU consumer price inflation 9 GMT. The annual rate of Eurozone consumer inflation for September is expected to be 0.3% in today's revision, according to the Econoday.com, unchanged from the flash estimate issued at last month's close. A new round of disappointing economic data will probably put more strain on the already challenged politics surrounding monetary policy. It was the latest market news provided by ICO FX. Goodbye.